Hi there, welcome to Kneppy Invest. In today's video, I'm going to be looking at a company I really haven't looked at in the past. That is Genex Power. If you are an ESG investor or invest in environmentally friendly companies or companies that are thinking about the future, Genex Power could be the company for you. And even though I do agree that we as a country, as a world, should be looking to the future in regards to becoming more environmentally friendly, it doesn't mean that these sort of companies are investable. And that's what I'm going to have a look at in regards to Genex Power. And the main reason I'm actually going to be doing this video today is because this company was operational cash flow positive for the March quarter. So they are moving in the right direction. However, this company has been listed for about 7 years, and it hasn't been good for shareholders in that time. It's been good for the company because the valuation of this company has gone through the roof. However, the share price has fallen since they IPO'd simply because the amount of shares this company has issued, because of all the expenditure they have needed to make to bring all their products to fruition. So let's get into Genex Power and talk about what this company does and some facts in regards to Genex Power. Genex Power is a renewable energy and storage company with quite a few projects in Queensland and New South Wales. Some of these projects are online right now, creating a bit of cash flow for the company. They have also a few more projects which should be coming online over the next 2 or 3 years. They have the Kidston Clean Energy Hub in Queensland with a solar project up there that is operating right now and under construction. They have a Kidston pumped storage hydro project, a wind project also in development, and also a solar project in feasibility. Down a little bit further south from that Kidston Clean Energy Hub in Queensland, they have the Bouldercombe battery project that's in construction. And then in New South Wales, they have the Geelong solar project that's actually in operations right now. So a few things online right now, bringing a bit of cash into the company. And excitingly enough, they do have quite a few projects coming online over the next 3 years. This is a nice little timeline of all the projects they currently have on operations or in operations and hope to have in operations or start operations within the next 3 years. So for instance, they have the Kidston Solar and the Geelong Solar right now in operations. They also hope to have the Bouldercombe battery in operations in the next year, so within calendar year 2023. But it comes really exciting for this company in 2024 and 2025 when they hope to have the Kidston pumped storage hydro in operations and also the Kidston wind project in operations as well. And the reason those are too exciting is because, for instance, the pumped storage hydro has 5 times the electricity generation as the Kidston Solar and the Geelong Solar and the battery, and the Kidston Wind has 4 times the electricity capacity as those projects currently online. So it becomes much more exciting for this company once we move into calendar year 2024. So Genex Power is in renewable energy and storage, and that should be a very high growth sector of the market over the next decade. So they're definitely in the right space. But whether Genex Power can take advantage of that increased interest in this area remains to be seen right now. But they've been around for a while. Genex Power was founded in 2011, listed on the ASX in July 2015. So they've actually been listed on the ASX for 7 years. And the current CEO is James Harding. He's been their CEO for the last 4 years. Now it becomes interesting. When you look at the market cap of this company, when they listed on the ASX, in fact, the market cap was only 32 million. Now the market cap of this company is 208 million, yet the share price has actually fallen. So even though the company is about 6 to 7 times larger in terms of valuation for shareholders, it has not been good news. In fact, the share price has fallen. So the company has grown in size, but it has not been beneficial for shareholders. And the reason for that is the amount of shares this company has issued over the last 7 years. In fact, shares on issue have increased from 158 million to 1.4 billion. So shares on issue have almost increased tenfold over the past 10 years or 7 years. And the reason behind that is they do have to spend a lot of money to bring these projects online. The other thing is they have actually increased their debt significantly over the past few years. I'll talk about that later in this video. And the T code for Genex Power is GNX. I'll just quickly go through the financial state of this company. This goes back to 2018. Now, this is just half-year data looking at revenue, profit, and cash flow from operations. This company has been generating revenue since the start of this chart. So back in 2017, that's when they started generating revenue, but really no significant increase in revenue through this time. In fact, it's been going sideways. But in saying that, the last half year, they did generate $9.4 million in revenue, which was their record half year. If you go back to the first half or the second half of financial year 2020, only $4.9 million of revenue, and they were loss-making that particular half year by $15 million, and they burned through $7.5 million of cash. So this is a feature of this company right now. They are burning through a lot of cash, which is the reason why they've had to raise a lot of capital. This is a highly capital-intensive business. And when you do have a highly capital-intensive business that doesn't generate any cash flow, they will have to go to the market to raise capital, and that's what this company has done. The question I have moving forward for Genex Power is, do they have enough capital for the next 3 or 4 years to bring those two really good projects online in 2024 and 2025, that hydro one and that wind project, because by that time, I think they should be generating enough cash flow to fund further projects after that. Now let's have a look. And the whole reason I did this video is simply because they were operational cash flow positive in the most recent March quarter. So first thing I'm going to do is go back 1 year just to see how this company has progressed over the past year. So in the March quarter, financial year 21, they did have $3.6 million of receipts and were operational cash flow negative by $968,000. The other thing to see here, we'll notice here, is the interest and other costs of finance paid was $1.4 million. So if they didn't have any debt, this company would have been operational cash flow positive 1 year ago. And if you look at the 9 months to date, they actually paid $4.3 million in interest, and that takes away from the cash receipts, which was $8.7 million. So almost half of the cash receipts they did generate in the first 9 months of this particular year, they had to pay in interest because of the debt. They were also operating cash flow negative by $3.8 million. And the main reason they're operating cash flow negative for the first 9 months was because of the interest, because of the debt. They did have a fair bit of cash on hand at the end of this particular quarter, $39.1 million. You'll notice the PPE, which is capital expenditure, was only $1.3 million in this particular quarter. But the first 2 quarters in financial year 21, they actually spent about $52 million in capital expenditure. So again, this is a highly capital intensive business because of the projects they want to bring online. And eventually they're going to have to fund any more projects. And the best way to fund projects in the long term is through operational cash flow, is through free cash flow. You don't want to keep going back to the market asking for funds, or you don't have to go to those banks for more debt either. So that's why it's highly important for this company to generate cash flow, to generate free cash flow. That's probably even the most important point for this company. And if they do reach that on an ongoing basis, that would be an important inflection point for Genex Power. Now let's have a look at the most recent quarterly report for Genex Power. And this is the whole reason I decided to do a video on this company. They're in an exciting space, and they did generate an operational cash flow positive quarter. Receipts to customers in this particular quarter, $7.8 million. And I would think that might be a record quarter for the company. And even though they did have to pay $1.5 million in interest, they were still operational cash flow positive by $1.7 million. So they are on the way to hitting that inflection point of being able to fund future projects through the cash flow. I think they've still got quite a few years to actually get to that point, because if you look at the capital expenditure over the past 9 months, they have spent $194 million in capital expenditure and $100 million in this quarter alone. And potentially the reason they had to spend a lot of money is to bring those future projects online. They did do a pretty significant capital raising, $47 million capital raising, and they also increased their debt by $77 million. So this is a high debt company. One of the things I don't like about Genex Power is the amount of debt they do have, but the cash on hand at the end of the quarter was $62.4 million. Now let's have a look at the debt. And at this point in time, the debt is sitting at $365 million. So even though they have a market cap, whatever it is, just above 200 million, you have to add the debt to that market cap to give a rough valuation of this company. So when you do that, the valuation of this company, the enterprise value of this company is well over $500 million. Not only that, the debt has almost doubled over the past year. I think 1 year ago, it was 200 million. Now it's 365 million. Now, this increase in debt, the increase in capital raisings, or the amount of capital raisings they have done, could be for good things. It could be bringing these projects to fruition, to becoming online, to generating more cash flow for the company. So really, I want to see that. At this point in time, the amount of debt they do have on hand is a little bit concerning to me. I'd like to see this company generate significant amount of cash flows before I become comfortable that this company can make it. Now, in saying that, we are starting to see an increase in receipts from customers. So this is very important that we see receipts increasing through time. And if we go back to the March quarter 2018, when I started following this company, receipts really didn't grow from that quarter up until the December quarter 2020. You can see receipts went from 2.1 million to 2.4 million, but receipts have tripled over the past year and half almost, from 2.4 million to 7.8 million. So that's 6 quarters of growth in receipts. And we want to see this growth continue in the future, because it's going to be very important that they maintain being operational cash flow positive. They become free cash flow positive. The other question is how much more capital expenditure they would need to spend or have to bring these other projects online. So all this needs to be asked by any wannabe investor in this company. Now, if you focus on the long-term chart for Genex Power, this is the weekly chart going back to when they listed on the ASX, so all the way back to 2015. Nothing too exciting in regards to this chart. In fact, the share price has gone sideways. In fact, the share price has fallen from 20 cents when they listed to 15 cents right now. There has been times when this would have been a good investment for the short to medium term. From 2016 to 2018, share price increased from 7.5 cents to a high of about 38 cents. But then the share price fell from 38 cents to 7.5 cents. So the share price does move in trends. And right now, the short to medium term trend is down. The share price has decreased from about 26 cents to current share price of 15 cents over the past 15 months or so. So at this point in time, no reason to get excited about Genex Power just by looking at the chart. And there are a few things I'd like to see the company achieve before I think this is an investable company. And those things are becoming free cash flow positive on a consistent basis. Not only becoming free cash flow positive, I like to see it become highly free cash flow positive. So any future projects they do have in mind, they can fund it through their operations, so they won't have to go back to the capital markets for further funding. So that's really all I have for Genex Power. And looking at the March quarter financial year 22 results, it was a good quarter for the company because they were operational cash flow positive. However, because they did spend $100 million on capital expenditure, they were highly free cash flow negative. So that is very important, that this highly capital intensive company can become free cash flow positive on a consistent basis. If you do have any questions about Genex Power, I'd love to hear it. So leave a comment in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.